Your bank statement can look overwhelming, but it's actually simpler to understand than you think. By the end of this video, you'll know exactly how to read every line of your bank statement, and you'll never wonder, why does my balance look wrong? This is your complete guide to understanding bank statements. Let's get into it. So first, what is a bank statement? A bank statement is a document from your bank that summarizes all of the money that came in and went out of your account over a specific period of time, usually 1 month. Think of it as a monthly report card for your bank account. It shows you where your money went, what came in, and what your balance is. Now let's look at an actual bank statement example and walk through it top to bottom. Every bank statement has 5 key parts. Account holder and account number will be unique to you and your bank account. This identifies who you are and which account the statement belongs to. Statement period is the period of time the particular statement is reviewing. For example, this statement is for the month of June. Next, you'll have your beginning balance. This is the amount of money you started the statement period with. In this example, Alex started June with $3,000. Ending balance is the amount of money you ended the statement period with. By the end of June, Alex ended up with $3,155. And then all of these transactions are going to show us exactly how you got from here to here. So if you're ever wondering, how did I get here? Your transaction list will show you how. Let's break down how to actually read your transaction list. Each transaction has 4 pieces of information. You'll be shown the date you made the transaction, the description of your transaction, the amount, and then your running balance after making that transaction. For example, Alex started the statement period of June with $3,000. The first expense was rent on the first of the month for $2,000. That will leave their account balance at $1,000 after this transaction is posted. This is called a debit. A debit is any transaction where your money is leaving your account, like when you spend money, pay bills, or transfer money to a different account. On the 5th, Alex's salary of $2,000 hit the account, which increases their remaining balance. This is called a credit. A credit is any transaction where money is coming into your bank account, like paychecks, refunds, transfers into your bank account. So a simple way to remember, debit means money is going out and credit means money is coming in. Here are some common confusions about bank statements. We will start with pending versus posted transactions. Pending transactions means the payment was authorized and it's now being held until processing is complete. It reduces your available balance in your bank account, but not your actual balance. This is because it has not yet been approved and the money hasn't actually left your account yet. Pending transactions can change. For example, if you leave a tip at a restaurant or if you cancel an order, your posted transaction amount may change from your pending transaction amount. Now, posted transactions are final. This means the transaction was cleared, was verified, and the money was taken out of your bank account. Only posted transactions will show up on your bank statement. Next is ACH, which stands for Automated Clearinghouse. This is a bank-to-bank transfer of money. The most common ACH transactions are direct deposits like your paycheck, bill payments like your utility bill, tax refunds, and transferring between your bank accounts. ACH is secure, usually free, and you'll see it on almost every bank statement. One thing to be aware of is if you want expedited processing, there may be a fee. In fact, I accidentally did expedited processing for my business to my checking, and it cost $8. But I didn't know I did that. I was like, what is this fee? Here are a few common reasons your bank statement might look wrong. The first reason is that there might be a temporary hold on your transaction. We discussed earlier that holds are common, especially when the final amount of a transaction is not known right away. For example, if you go to a restaurant and you add a tip, the amount you see pending in your account may be different from the final posted amount. Another reason your balance might look wrong is from subscriptions you forgot about. Maybe you signed up for a free trial and forgot to cancel, or maybe you have a streaming service, app subscription, or another annual membership that renews automatically. These charges are easy to miss because they usually happen in the background. And if it's only $5, $10, $15, it might not feel like a big deal at first, but they can add up quicker than you realize. A third reason is that a deposit has not yet been cleared. Sometimes money may show up in your account before it is fully available to use. This can happen with checks, mobile deposits, transfers from another bank account, or even certain types of payments. For example, you might deposit a check and see it reflected in your account, but your bank may only show part of that money available right away. The rest may be held for a few business days while the deposit clears. The main takeaway here is that your bank balance is not always as simple as one number on a screen. Now let's go through a few bank statement red flags. Number 1, duplicate charges. This is more common than you think, which is why it's important to not completely ignore your bank statement. Sometimes this happens because a merchant accidentally charges you twice, or because one transaction is still pending while another version has already been posted. So before you panic, check whether both charges have actually cleared or if one is still pending. But if you see the same charge twice and both transactions have posted, that's when you want to take action. You can start by contacting the merchant directly because they may be able to reverse the duplicate charge. charge. If that doesn't work, you can contact your bank and dispute the transaction. This is one of the reasons I recommend reviewing your transactions at least once a week. You don't have to obsess over your account every hour, but you do want to catch mistakes early. 2, an unknown merchant. If you don't immediately recognize a charge, that can definitely be a red flag, but it doesn't automatically mean it's fraud. Sometimes the merchant name on your bank statement doesn't match the actual business name you remember. It might show a parent company or a payment processor or a shortened version of the business name. This can also happen with apps like PayPal, Apple, Google, Amazon, or delivery apps where the charge may not be listed exactly how you expect. Or if you have a shared account or another authorized user, someone else may have made a purchase without you realizing. So before assuming the worst, do a little digging. Search the merchant name, check your email for receipts, look at your order history, and think about where you were around that date. But if nothing is adding up, your next step is to lock your card and contact your bank to report the charge or file a dispute. The third, unexpected fee. If you see a fee you weren't expecting, don't just accept it and move on. Look into what the fee actually was. Was it an overdraft fee, a monthly maintenance fee, an ATM fee, a wire transfer fee, a paper statement fee? Once you identify the fee, you can make a plan to avoid it in the future. That might mean keeping a larger buffer in your checking account, turning on overdraft protection, switching to a fee-free bank account, using in-network ATMs, or setting up a direct deposit to waive the monthly maintenance fee. And honestly, it can also be worth contacting your bank and asking if they'll waive the fee, especially if it's the first time it happened. A simple message like, hey, I noticed this fee on my account. Can you explain what caused it? And is there any way to waive it as a one-time courtesy? This can sometimes get the fee reversed. The big takeaway here is that your bank statement is not something to be afraid of. It's just information. And when you review it consistently, you'll be able to catch mistakes, spot fraud, and understand exactly what's happening with your money. Here's what I want you to do right now. Open your bank app, pull up the most recent statement, and look at your last 5 transactions. See if anything surprises you. I hope this encouraged you to take a little closer look at your transactions on a regular basis and feel more confident with your finances. If you found this video helpful, check out Chime's YouTube channel for more money tips and tricks like this.